What is up, everybody? Welcome back to Stock Talk with Paul. Today, we're going to be learning what a moving average and an exponential moving average is. And these are commonly used indicators that you're going to use on your chart, and they're going to help you to identify the trend direction in the stock, so whether it's moving up or down. So let's just get into the first one here. It's a moving average. It's abbreviated MA. Let's just read the definition on this. In statistics, a moving average is a calculation used to analyze data points by creating a series of averages of different subsets of the full data set. In finance, a moving average, MA, is a stock indicator that is commonly used in technical analysis. The reason for calculating the moving average of a stock is to help smooth out the price data by creating a constant updated average price. So that is a moving average. Pretty simple, right? All right. So let's just move on to the next one. So our next one's going to be an EMA, an exponential moving average. So let's just read this definition quick. An exponential moving average is a type of moving average, which we just talked about, that places a greater weight and significance on the most recent data points. The exponential moving average is also referred to as an exponentially weighted moving average. An exponentially weighted moving average reacts more significantly to recent price changes than a simple moving average, which applies an equal weight to all observations in the period. So, pretty much what it's telling you is it's just going to react faster than a simple moving average or a regular moving average. It's going to react faster to that price change. So that's pretty much all it's telling you. So let's just move on over to the chart real quick, and we'll just show you how these indicators look on your chart and how to read them. All right, so we moved on over to our chart, and if you look up here, you'll see EMA and MA. You'll have to set these up yourself. I'll show you how to do that in a second. I just want to show you how these react differently from each other. So we'll show you in a 5 minute, then we'll head out to the daily, and we'll show you how it's differently on different time frames as well. So we'll click on the MA. You'll always have four lines. You'll have your 8-day, your 21-day, your 50-day, your 200-day, which is these. And you always want them just as how they are right now. But they will start to cross each other. That's how you can identify a trend direction. See, as this 8-day crosses 21-day, it happened about this candle here. You know it's about to move down in a downward direction. Um, so let's just check out this EMA as well. It's kind of harder to tell on this time frame. So I'll head out to the daily time frame. You can see it better. Let's just do that quick. All right, so this is our daily time frame, right? Now let's just take a look at our EMA. See how the 200-day was up here. It's just reacting faster is all than our other moving average. All these lines are going to move differently. They're just going to react quicker, so we can make better decisions. So that's pretty much it. So let's just head on over here. I'll show you how to set these up. So first you're going to go to Edit, and you're going to have that come up. So you'll click on the MA or the EMA, excuse me. And then you're going to, I don't know if what these will be, but your first four, you just type in 8, 21, 50, 200, move over to your style, and then you can choose your colors here that you want them to be. Make sure you're clicking these because these won't be checked. So you want to click on these and check them so that it shows on your chart. And then if you want, you can go over here and read about a little bit more about them if you want to try to understand them more if I'm not explaining it well enough. So that's them. Same thing with the moving average. It'll be here. So it'll be the same thing. You'll just have to go in and put your settings in. And that's that. So let's just head back through the chart. I'll just show you a couple examples of, so, this one's in a downtrend. Now, this 8-day crossed the 200-day. That's really not good. As you can see, and once it got down below this 8-day, it stayed there for a while. But then you can see it tried to cross, and it finally did. So now we could be heading in an uptrend. I really wouldn't like to get into this until I see it get above the 200-day. Some people are different, but let's go over here. I want to show you that, once it is in a trend, it's not really a good example. Let's head on over to a 4-hour chart. I just want to get an example where it bounces off of it. Okay, here. See how it came down here, and it did cross above the 8, but it came up and it just touched this here, this 21 day. A lot of times it will do that. So you know this isn't looking good for AMC today, but um, this could very well next week come down and touch this 21 day. So if you see it starting to head towards that, it's most likely going to touch it. Doesn't mean it will. No, it won't. It doesn't mean it will, but it could. So um, that's really your moving average line. So we'll get into more indicators to help you determine more trends. Um, and more tools to put in your arsenal to help you make better decisions. So that's really all I have for you in this video. If you have any questions, please shout them out in the comment section. I'll try to answer anything. So until then, next time we'll be working on the RSI and the MACD. So until then, we'll see you next time.